Good evening. Welcome to the professional approach to futures trading on Binance. Basically, that's what we're going to be talking about. So my name is Sheyi Fala Adekunolu Sheyi, also known as Crypto Smart or SY Crypt. So we're going to be talking about how to trade professionally on Binance, futures trading basically. But before you start, there are some things you need to know. There are some basic rules you need to understand, and that is where we're going to be talking about. I'm going to start with that because they are very, very important. Like we work on the marble, like I shared yesterday. When you lose the desire to get rich quickly, you will lose the desire to over risk. When you lose the desire to over risk, you will survive. And when you survive in the market, you will make money. That is actually one valid reason. That is what in summary, just trying to say, lose your greed. Lose your greed. Anything that's going to make you greedy, because the more greedy you are, the more the tendency for you to lose actually. So lose your greed, basically. So, and the next one I'm talking about is safe trading fundamentals. So these are like the major things you need to understand, the major things you need to know before you go into trading. I think I asked yesterday that what is the drive, what was the motive for you joining this class? And many people say they want to do it to make money. Yes, but if you're going to do it to make money, you should understand that you're not doing it to make money as fast as you can. It's about growing your wealth. And before you can go into trading fundamentals, please can you mute yourself? Before you can go into trading fundamentals, you need to understand some basic points which are here, which are some of the things I listed here. One, develop your technical and mental skills. When I say mental skills, that has to do with you having the ability to be able to analyze charts, you having the ability to be able to control your emotions. Your mental skills is very, very important. Like I said yesterday, the greens and the red candles you see, they indicate people's emotions. So if you know how to analyze those emotions, you are going to win in the market. That's the way it works. So you develop your technical and fundamental skills. That's very, very important. That is very, very, very important. And two, create non-market related income. What I'm trying to say is always have multiple stream of income. Don't depend solely on trading. Make sure you have a backup project or backup business, like offline business, even online business can be a backup. Don't put all your money in one basket. That's what this is trying to say. Create multiple streams of income, not just trading. Like I said, you can be doing every other thing you're doing. You can be selling your memory card like Mr. Deji normally say. You can be selling your memory card. You can be selling suits like I do. You can be into decoration. You can be into any business and still be a trader. It doesn't stop you from being a trader. So the next one is for you wait for high probably gain to risk scenario. That is, think long term whenever you're trading. Over time, I think there's this research that came out from the University of I forget the name. I think probably California or something like that. The research actually shows that 90% of day traders lose money over time, and it takes them up to we have this feelings of, oh, I want to gain more, I want to make more money, and you still end up losing in the long term. But when you actually put your mind into the long-term game, you're playing the long-term game only on good assets anyway, the long-term game, that is when you actually get to make more money than when you play short-term game. If you notice, study all these billionaires and like they invest on long-term project, not just a short-term project. Okay, and when you're doing your analysis, you analyze coins towards a long-term perspective, not a short-term perspective. That's why I always tell you guys, when most of the people in my VIP group, when I drop information for them, especially one of them is that is actually on here right now. They tends to want to trade in the short term, which is actually very not as profitable as looking at coins in the long term. And yeah, so and the next one is always take profit and don't look back. What I mean by always take profit and don't look back is you take your profit once you're making a trade and you, let's say your emotion actually push you to take a profit. Once you take your profit, just accept the trade is looking still bullish or probably is looking bearish and you feel you can still enter again. That is the only reason why you should enter. Because if you look back and you place your career and you look back and you probably FOMO'd at the top. What I mean by FOMO is fear of missing out. It's like, oh, I already missed out of this pump, and you FOMO'd at the top. When you buy it at the top, the coin that actually can start, the stock or market or whatever can start dropping. And that you're going to be trapped, or you might actually end up closing at loss. So make sure when you take your profit, like I said, always take a profit. But when you take a profit, just close your eyes and go to another coin, go and hire something else. Except the coin is still bullish or is still going in the direction you understand. That's when you should go back into that coin. It is very paramount. I actually have some trades that I'm going to show you. And I think there's one point I did not add here. I think I need to add here. You are not yet in profit until you close in profit, and vice versa. You're not yet in, okay, then stop trading when market condition changes. That is when the condition of the market change, which you don't really understand. That sometimes when the consolidation is very, very, very low, that is the bulls and the bear margin is very, very much, like it's not very much, and the consolidation is like when I'm going to show you something like that on the chart. When you have the chart is actually going like I think if you're a science student, you get to understand what we call by simple harmonic motion. The graph is like goes up, the harmonics is actually, the amplitude is actually very high. Then I start getting lower, smaller. When the chart is actually very, 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 very small like that, it is best for you just to get out of that trade. It is not very, very profitable. If you're going to place a trade, don't place a trade at that medium. Just place an entry below. It can come down and eat it and go back up. You're actually going to be in profit. That's the best way to trade those scenarios. When you actually have consolidative movement on the chart, the best is either you stop trading at all or you just place your trade below it and wait for it to, if it drops and eat it, fine, you're good. But if it doesn't drop and start going up, then you can actually start trading again. Then the last one is you are not yet in profit until you close in profits, and you are not yet at loss until you close at loss. Okay, this is very, very important. If you can see a profit of 1,000%, if you don't close it at that profit, if it dumps, you have not taken a profit. You don't have anything. You're not yet in profit until you close at profit, and you're not yet in loss. If you can see a trade of minus 3,000%. If you don't close it at 3,000%, minus 3,000%, you don't lose that money. You only lose when you close that trade. Okay, that is very, very important for you to note. You only lose when you close the trade at loss, and you only gain when you close the trade at profit. Okay, so I'm going to that's some ground rules. I think that actually should be under the ground rules. I think the last one, this should be under the ground rules. Let me copy it and put it under the ground rules. Yeah, it should be under the ground rules. Then the ground rules in trading: understand the platform interface. That is, whichever platform you want to trade on. If you're trading on Binance, make sure you understand the interface, what it works. That is one of the things I did yesterday to show you how Binance works, what the interface look like, what the function of all the tools and the likes, what you use them for, trade, how the platform works, what the platform is all about, how to use the tool. You must understand that. If you're doing that, the fact is, if you understand one platform, you can use that to relate with other platform. If you understand Binance, you can use Binance to relate with KuCoin. If you understand BitMEX, you can use BitMEX to relate with another exchange. There was this time I actually wanted to trade Forex. I understand the chart. I even gave my friend, I'm not sure if he's online right now. I gave him, he trades Forex, and I gave him the signal to actually buy. Like, I just gave him the ground rules, what I used in trading, how I analyze tools, I gave it to him. And within that day, he makes $450 within a day. And I was like, okay, fine, let me just check out this Forex of a thing. The fact is, I try to use the same mentality, the same platform interface that I've been using for trading. I tried using it on, I was able to place the trade, fine. And I already analyzed it's going to go up, and it's going up, I was in profit. Now for me to close the trade is not the wala, because I want to set my stop loss. The way I know to set stop loss on BitMEX is quite different from the way they set stop loss on the Metaphor app. It was very, very, very strange. I tried all I could. It's not closing. The only thing I could do was place my target. So I was just praying God let it hit my target, because if it doesn't hit my target, I'm going to lose that trade. And funny enough, I was lucky enough for it to go up and hit my target. And since that, I never go back to Metaphor again, because I've actually not gotten somebody to actually teach me how the interface works. Or I've not really gone through videos to learn how the interface works. Though I'm much more familiar and I'm more relaxed with trading with crypto, because you trade it 24/7. The market doesn't close. It has the benefits, the margin, the growth margin, the volatility margin is quite higher than that of Forex, and you can make a lot of money on it, even just doing spot alone. So that's one of the things I get to look at. So basically that's it. And now let's go to the chart. So we're going to be talking about the interface. Here is your pair where you actually get to select the coins you want to trade with. You want to trade Tron. I was actually going to call this coin this afternoon, but I forgot. Tron per USDT is actually trading at 29%. This is 29.9% margin increase. Now, if you're trading futures, you actually have the liability to be able to make times 20 of this. That's like what I'm doing right now. If I enter at the beginning of this trade and I was able to trade and I'm using 20x, I'm going to be making 20 times 26. That's the percentage profit I'm going to be making. That aside, let's go back to what I'm talking about. So we have Tron. This is where when you can over your mouse over this to select. Now, sorry, the first thing first, before coming here, is to go to the first interface you're going to come up with when you enter a Binance. Once you launch Binance, the first thing you're going to be shown is your is your spot chart. That's a spot trade chart, and that's what you can see here. So we have spots. These are spot charts. Now, if you want to go to futures, you click over it, you over your mouse over derivative. Now we have what's it called? USDT, we have coins. For USDM futures means whatever profit you're making or whatever loss you're making, you are doing it on USDT. That is what this stands for. And if it's coin, that is, if you're making profit on any coin, if you're doing any coin trading, you're going to be making profit in the coin you're trading with. Let's say you're trading with Bitcoin. That is where, if you want to make profit on Bitcoin, like this, you're going to be trading against Bitcoin. As in, if you're shorting against Bitcoin or longing against Bitcoin. That is when you click here. But if you want to be longing or shorting against USD, that is when you click here. So we're using here for now. You can actually switch to anyone you want. I'm using USDT because it's quite stable. So with USDT, I'm able to easily track my USDT because it's a stable value or stable coin. I can be able to track my coin movement like that. Okay. So when you click on that, it's going to bring you to the interface. Now it's going to be showing original, but I do not like using original because original has less indicator. If you look at the number of, you see, these are the number of indicators you have on original. This is where I click on to select your indicator. These are the only indicators you have on original. But I prefer using TradeView because TradeView gives me more indicators to use. You can see. If I click on TradeView indicator, technical indicator, you can see them. A lot of indicators, like free indicators I can use compared to that of original. So I have access to use as many indicators as I want from here. That's why I like using TradingView. Okay, so the next thing I want to look at is the time frame. Your time frame is where you select the time frame. Are you trading? If you're a short-term trader, you'll be trading between 1 minute and 1 hour. If you are mid-time trader, you'll be trading within 1 hour and 4 hours. If you are long-term trader, you'll be trading between 4 hours and 1 week chart. So these are the time frame you can select: 1 hour, 15 hours, 4 hours. So normally I do mid or long-term trade. There are times I convert my long-term trade to short-term trade. Like yesterday's trade, there was a trade I was already in $9. I closed it. I think that was CHZ. Yeah, I already closed it. I closed that profit. I just took my profit, $9 profit, and entered again. And right now, I'm not sure if I'm already in profit or something. Okay, I was in profit this morning, but it has gone back down again. So CHZ, you can see here. So that is one of the things you need to know. Like I said, you're not yet in profit until you close at profit, and you're not yet in loss until you close at loss. Then you noticed yesterday the coin was around here. So after the class yesterday, I just took my profit and wait for it because I know it's going to dump back. It seems like it's going to come back. So it's best for me to actually take profit and wait and take again than for me to wait for it to dump before I take a profit. I'm like, okay, I have $10, let me just take $10 profit and wait for it to dump and buy again. So that was what I did. So when it was around here, I took my $10 profit. I placed another entry around here that if it dumps, you eat. And when it jumped, there was a manipulation this morning. It jumped and eats. And right now that's why I'm actually around here. If you dump further, I already placed another entry here to buy again from you. So it's going to adjust. I'm going to give you the formula to adjust your entry in this class. Before the end of this class, you're going to get that. Hope I'm not too fast. Not too fast. For those that don't know.
are getting you, sir. We're
Okay.
getting you. Personally for me.
Okay, good. Others, Alpha. Hope I'm not too fast.
So the pace is okay. Continue.
Okay, good. So, and here is where you see your tools. You can see the trend. This is where your trend line tools is: trend line, trend angle, horizontal line. These lines, this green line that I drew, is where I select them from. I select the green lines from here. I want to use trend line. I want to use horizontal line. I can put my horizontal line. So you can change the color here. You can change the color. You can change the thickness, the width. You can copy it. You can clone it. These are copied. These are cloned. If you want to lock it, you can click on lock. If you want to hide it, you click on hide. If you want to delete it, you just click on delete. And these are what. Please mute yourself, please. These are what you actually use to do analysis. You know, yesterday I said I'm actually holding my CHZ position because it just broke out. Look at what happened here. This is a downward slope trend, and the triangle wedge just closed and it just broke out of the support. Now we are having a support around this region. That's where I put this orange line here, this pink line. This pink line is actually showing magenta line actually is showing our support around this region. So we have a support around this region. So I'm actually expecting it to actually, if this support will get broken downward, then we might actually come to test around this region. So these are actually indicators. These are what's called trend lines. What am I saying? These are tools you can actually use to analyze chart aside using indicators. Okay. Aside using indicators, these are tools you actually can use to analyze your chart. So you have the pitchfork, you have the Fibonacci retracement, and several other tools here. You have you want to include text. Let's say when I'm doing analysis, I want to type on it, I include text. If I want to do what's it called, your patterns, your ABC pattern, Elliott wave, head and shoulders, and the likes, you can select them here. And if you want to do the price range, you can select the price range, your forecast, your date range, long and short position, and be able to predict and do your forecast and be able to analyze. Like most times, when I called it, I think there was a coin I called yesterday on the on the VIP group. This is how actually I got to know this was how I got to know the profit margin. Like, okay, clicking on price range, then I can click on where I gave the signal and where the coin got to. So when I get to there and when it got to get to, it was 160. Let's say from here to here is 166.15%. That's the profit if you are bought here. That's the profit you will have made if you are bought there. So that's actually how to use this indicator and the likes like that. So what else? The next thing is coming to your place order tab. The place order tab actually gives you insight on how to be able to place order. If you want to place your order on limit order. Limit order allows you to be able to place determine the price you want to buy at. Like I said, limit order will allow you to determine the price you want to buy at. While market will buy at the market at the I won't say the best, but it will buy at the best or worst market rate. Is going to buy at the market rate. That's one thing you should know about market. It's going to buy at the market rate. The market rate might be what you're looking at, but it will actually buy at the market rate that can be filled. So either it is good for you or it might be bad, because your coin can get manipulated and the market will just go up. It will buy at that top, and before you know it, you're already in minus. So it's best. That's why most times I prefer using limits to place my order. It's only probably I place my order and I want to get out of that trade quickly. That is when I use market. But for placing order, I don't use market, I use limits. And I'm not sure about Binance, but on BitMEX, trading fees for limits is cheaper than that of market. I think limit is 15%, market is 75% on BitMEX. So it's actually profitable for you to use limits than using market. Then the next thing we have is this trailing the stop losses. Now, it is possible for you to stop loss is actually for you to either take profit or to stop you from losing too much. And also, normally, actually based on my strategy, stop loss can be used to convert your long to short. You can use stop loss to convert your long to short or your short to long. These are things you're going to learn in the class. And for you to be able to do that, I think long conversion, that is where you have to disable this reduce only. Now, For you to place a trade, we have TP/SL. TP/SL means take profit slash stop loss. So if I click on it right now, you can see it's going to tell me you can. That I'm saying it's possible for you to place a trade. As you're placing a trade, you enter the where you want to take your profits. Let's say I'm placing this trade at 0.49. I want to take my profit at 0.8. So I'm saying when it hits 0.8, it should take my profit. But if it goes below 0.4, 0.42, it should stop. It should close the trade for me and just stop me from losing more. That's what this is for. But normally, like I advised yesterday, I don't advise you use that. Don't use this stop loss, because sometimes a trade, there's this thing I talked about on the Telegram channel. Let me share. There's this image. I'm going to share the image with you because it's very, very important.
I can see the screen now.
The reason why I said it is best for you not to place your entry, not to place your stop loss while you're placing your entry, is because of something like this. This gets to happen a lot. This is where manipulation comes in. The big market whales, the big players, this is what they do. You thinking this is a support, but it will actually break the support and close above the support immediately. It just come, we have a dump, and people that place the stop loss around there, they get busted, and they're just going to get you can easily lose out or get liquidated. That's why I said it's not best for you to actually get one. Don't put your stop loss close to the support level. Your support must not be too close to the support level if you want to use it. And if you're not using it, it's best for you to just wait and place your trade, then analyze the chart before you actually. There are strategies that normally I don't use stop loss in futures trading. I have my reasons and I have my strategies to that, because it is much safer for me not to use stop loss than for me to use stop loss. I tend to lose more when I use stop loss than when I don't use stop loss. So this is what I'm trying to explain. It is best for you not to use stop loss because of something like this a chart like this can actually get to occur. Okay, I hope you get you get the point. Okay, yeah, we're back to that. So that's what I mean by not using your stop loss. So it's best for you not to use this at all. Or if you can actually place your target, you can place your entry point and you take profit at once and just close it. Don't enter stop loss yet until when the coin has actually settled and you cannot place your stop loss. Now, if you know you're going to go away from the trade and you're opening a large margin, it is best for you to use stop loss. Don't get me wrong. I said I don't use stop loss because most of my trades, I will hardly get liquidated. If you see what I have here, this is my liquidation price. What do you see here? 0.0000, nothing. Because of the strategy I'm using. There are times I actually can get it, and that strategy allow me to be able to manipulate my entry position. One of the strategies I use allow me to be able to manipulate my entry position. That is why I really do not bother about using stop loss at all. Okay, I'm going to give you the formula. Don't worry. So that's that about stop loss and TP and SL. Then reduce only means whenever this is activated, your orders will always get reduced. It will never go beyond what you have. That is, even if you place an entry, the entry is going to change your order to be above what you have already. It's going to cancel it out. That is what reduce only is for. Then we have TP. We have good to cancel. That's GTF, GTC Jare. Now TIF means that's the time in force. That is good till cancel means the order will continue. The order will actually get executed. That is, you can be able to buy multiple trade. Like let's say you open an order for 1,000 position. It's possible for the 1,000 position not to get filled at once. If it doesn't get filled at once, if your order is a good till cancel order, it can take 5, 50, 500, 200 like that till your order is filled. But if your order is on probably immediate or cancel, it will actually, if it doesn't fill that 1,000 at once, to cancel it. Or fill or cancel, the same thing. If it doesn't fill that 1,000 at once, it will cancel it. This immediate or cancel, like if order doesn't fill immediately, just cancel it. Fill or cancel means if the order doesn't fill at once, like that 1,000 did not get filled at once, cancel my order. I'm not taking it again. Something like that is what it is all about. So that's what these are all about. I normally use GTC. That's a good to cancel. Until I cancel it, it is good. And now, how do I select? Also, the margin ratio. The margin ratio is very, very important. If your margin ratio gets to 50%, or gets to 100%, once it hits this red, then you should know it's actually going to get you very, very close to liquidation. You can see my maintenance margin is actually about $22.75. With this $22.75, I can make close to about $500 in my trade. I can make even more than that in my trades. Yesterday, I was having $1,500. Right now, I'm having $1,700 something. I made 200 plus between yesterday and now. Okay, so those are things. It's not about you putting a large sum of money. It's about you being strategic about how you trade. To do that is to use the calculator, the trading calculator, which you have on this side. Trading calculator actually allows you. I think I did not explain stop loss well. I'm still going to go back to stop loss. Yeah, trading calculators actually allow you to be able to analyze your trade before you place it. Like, let's say my entry is 0.4 and I want to close it at 0.8, like I said yesterday. And what quantity am I using? I'm using 300 quantity. Now, like I said, these leverages are actually stops that allow you to place. It gives you the leverage in the market. If you're trading with 20x, that is whatever what's called entry, from whatever entry you have. Let's say Bitcoin did, you're trading, let's say you're trading Bitcoin and Bitcoin did 10% from your entry. If Bitcoin on spot trading, if you're doing 10% on spot trading, if you are using 20x on futures trading, you're going to be making 10 times 20. That's how much? 200%. So if Bitcoin do 10% and you're using 20x, you're going to be making 200% of whatever you're trading with. That is the implication of these x's. Now, like I always said, like I said yesterday, if you're using the same quantity, the same entry, and the same exit, it doesn't matter whichever leverage position you use, you're still going to get the same outcome. Now I'm going to show you what I mean by that. See, I'm clicking calculation. Now, what is my initial margin? Like I said, whenever you're trading, the cost, what you should look at is the initial margin or the cost. That is, whenever you place your trade, what you have here, what you have around it, where I place my cursor here, what you have here is what we call the cost. The cost is what you're trading. That's the capital the margin you're actually trading with. And if you're making 200%, you're making 200% of this cost. Right now, if I open my trade at 0.42 and I close it at 0.8, I'm going to be making 1,809%. That is 1,809% of. Look at what I traded with. I did with $6. I'm closing with $114. You get what I'm trading with is $6, $6.3. And if I enter here and I close here, I'm going to be making $114 with just $6.3. And what am I trading? The quantity is 300. Now I'm going to change my leverage position. You can see the only thing that will change is the initial margin and the ROE. You see, $114 is what I'm making on 20x. This what I'm using. My quantity is still the same. My entry is the same. My exit is the same. If I put it to 50x, that's the highest, right? Calculate. What do you say? With 50x, 300 position with 300 CJ will give me 2.52 margin, and what initial PN is still what 114. The only thing is my ROE, return of equity, is what 4,823%. What I'm making is still the same thing. So whichever leverage you're using, the only thing that leverage is done is it actually takes you it takes you closer to your liquidation if you're using higher leverage, and if you're using higher leverage and the quantity is very, very high. Right now, let me put it to. I'm going to go to liquidation. Let me put it to 30,000. With 30,000 quantity, look at that means I'll be trading with what 630 USDT. What will I be making? $11,400 at what percentage? 1,809% only. Okay, that's what I'm going to be making. So it's still the same. Now, what I mean by liquidation price. Now look at the liquidation. The same thing, 0.42, 0.42, 0.8. And I'm trading with margin of 300. Initial one I said. You look at, I'm longing, right? This is longing. Sorry, I didn't do it for 0.8. Oh, liquidation. Sorry, what am I saying? My quantity is what 300. My balance is 1,700. Calculate. My liquidation price, I won't get liquidated with this trade. But if I put it to 3,000, let's say I want to be greedy and I put it to 3,000, you can see my liquidation price. If the price of CJs drop from, and remember I'm using with this, where the risk actually comes in is if I'm actually in loss on this and I had to go and open because I'm on cross. Remember I'm on cross, and cross means I'm trading with all the capital in my portfolio. That is what crosses means. If I'm trading with only 20x without cross, I'm only trading with that isolated. That's what we call isolated trading. I'm only trading with the fund I'm using to trade I'm only trading with 20% or whatever I want to trade with in my fund capital. That is depending on the margin I'm using. But if I put it on cross, if I get liquidated, I'm going to be losing all the money in my fund in my futures trading account. If I'm using just 20x, I'm only going to be using the trading capital only. Now, if the price of CJs drop from whatever is 0.49 to 0.37, I'm going to lose everything in my trading account because I'm using cross and 20x. Now, the benefit of 20x is it actually gives you the leverage of any more. If you use cross only, you're going to earn, but with cross and 20x, it gives you the benefit of the leverage of any more, and you'll be able to manage your risk more. Because if I'm having $1,000 in my account and I'm using cross, I have large, and what I'm trading with is just 2% of my portfolio. It gives me more leverage to be able to. It gives me more backup fund. Right now, that's why I'm actually having 1.48. But if I switch it to just 20x, I turn off cross. This margin ratio will increase. It might actually be at 80 or 70. It's not best for me to switch it right now because I have about 13 trades open. Anything can happen on them. It is not safe. That's why I'm not going to do anything to cancel it right now. Okay. So what I'm trying to say is, when you get greedy, trading is all about accumulating your profits. Like profits. In 2 months ago, I did 7x. That's 7,000%. This 700% on my futures trading account. So it is not about making all the money at once. It is all about accumulating your profits. This is very, very important because if you can listen to my class, but it is still you, like I said, you have to know how to control your emotions. You have to know how to control your greed. Don't feed your greed. Don't feed it. Sincerely, don't feed your greed at all. You have to know how to control your greed. Do you understand what I've explained so far, or you have any question?
Is that going to fund your futures account? Is it the same thing as if you are funding a spot account?
No.
Or you are running two different accounts?
No, there are two different accounts. Like if you go to your wallet, if you go to wallet right now, futures wallet, you see we have wallets for futures coin USDT. We have wallets for coins, futures. We have fiat wallets. Now, if you need fund the first place you fund on your Binance is your spot account. Now, if you need fund in your futures account, you just come to futures, click on transfer. From transfer, you can select the coin. From spot, you can see when you click on transfer, you can select spot to futures. You can select the one you want, future USDT, or from spot or where. You want to select from spot or margin cross. You can just select it from where you have your fund. Select the coin you want to fund, which is USDT. What I have, my available balance right now on my distance is just 258 USDT. That's what I can. That's the only available fund I can transfer to my futures if I want to transfer. So you can now enter the amount you want to select, or just probably 50%, 75%, or 100% or whatever. Then click on confirm. Automatically, without fee, it's going to move to your futures account. Okay, that's how to transfer fund from your spot account to your futures account. Do you understand that? Okay. So there are two different accounts.